Consider it voodoo, witchcraft, magic, but personally, I'm going to consider this statistics because the top resistance we face today was in the cards from weeks ago, and guess what? You and I had already talked about the probabilities of retracement from that very target. Welcome back to the channel on this happy Monday. This is ARCa, and let's dive into ticker symbol FNGR. Let's kill them, team. What is up, you guys? Thank you so much for stopping by once again, and let's dive in to ticker symbol FNGR. Please notice right now, after hours, 4:18 Pacific time, we are currently sitting at the high. That's right, $7.13 in the after hour session right now. Absolutely ripping to that upside, especially after that little debacle. What happened, right? The little confusion over the S3 filing. This is great news, team. This is already showing recovery. It's already showing that we're knocking at the door at higher valuations. And these targets, like I said, we had already known them. And also, how about the pullback that we ended up getting, just like we spoke about, right? We spoke about a potential $6.30. We ended up dropping to $6.40. We got a lot of the bulls to load up right here. Many people on the live stream ended up getting long this asset and then immediately in the green right after that push. Very much a congratulations deserved to you, my friends. Thank you so much for coming by to those live streams. Remember that I will be covering this ticker and more every single day, 6:30 to 6:40 a.m. typically, right? Pacific Standard Time. So make sure to come by and make sure to come and hang out with the family and participate, because this is it is a very good time to be trading, right, team? So yeah, let's go ahead and observe here, though. This is the ascending channel that we've been talking about for at least a week now, right? So if we are going to focus here on the resistance top of this, and this would be suggesting a top side, say for example on this next bi-hourly candle, right, which is going to be starting in the after hours or the early pre-market, right? That would suggest a top side of around 740, and of course it'll fluctuate ever so slightly as we move beyond that, right? Into the let's see, into the pre-market, it would be around 743 to around 749 resistance. Okay, so I just want you to know that it's going to be a little tough for us to get over that 716 top side, right? Because that is this mark right over here, and it's the relative range high, right? So before us starting to make these 52-week highs around the 818 mark, which is the 3-spot 618 at 820. Nice relevance there, by the way. Okay, so right, so I wanted to talk to you about something very, very important. So let me go ahead and just pull up the statistics right now, right? And I think I do have them right over here. Here we go. Okay, so for the new viewers, I want you to know that I practice mathematical models. By using these, I can consider my projections to be a price forecast, not necessarily a price prediction. Never consider this a price prediction, because no one knows, no one has a crystal ball, and we absolutely have no idea what price is going to do the next day. Okay, but if we do practice some statistics here, then we have a higher probability towards a move to the upside or to the downside. So what I did here is that I measured the amount of times that volatility contracted into this zone here, which is the critical contraction zone within the 15th percentile of volatility, and volatility represented by this indicator BBWP. It's in a linear fashion instead of it being displayed on pane like with clouds. If you've seen the Bollinger Bands, that's exactly what I mean. It's an on-pane representation of volatility, but you can see in the Bollinger Bands how that doesn't really show any metric, right? So I can just show you just real fast so you can kind of know what that Bollinger Bands thing looks like, right? These clouds, right? So it's really simple. Anytime that price expands into this level here, then we get a sell, and every time that the price contracts into this level here, and we get a buy, right? And you have the center of the Bollinger Bands, aka your mean, right in between. So, fine strategy, but as you can see here, it gets very random, right? I mean, look at this right here. This is, I mean, the further away the clouds get to each other, the further into expansion we are. Hence, expansion up here into critical zones. See how there's no way of telling how much this 90 percentile is going to be. Look at this iteration here. The space between this area here is obviously smaller than this one here, and it's casually located in the same 90 percentile. So that's why I am using, I'm going to try to be as detailed as I can here so that you can see that I'm not messing around here and I'm actually displaying to you a real mathematical thesis. Pardon me. Okay. So, anyway, so yeah, let's go ahead and continue here. Anytime that volatility has contracted into the critical zone, which is within 15%, and started an expansion phase paired with an upside pivot of stochastic momentum, which represents an EMA3 or a 3-day exponential moving average and a 14-day simple moving average. I mean, pairing this volatility with the momentum pivoted towards the upside, I have, anytime that has happened, right, I have taken note of every iteration throughout the entire trading history of the FNGR asset on the daily time frame. So these are all of my samples. So just so that you know what I'm doing here is that let's just go ahead and kind of zoom into one of these iterations, right? So here's one, and this on average took 1 day. I'm sorry, this iteration here took 1 day to complete from the opening of the candle to the range high of the next area. Since that was the highest valuation during the expansion phase, and then it just continued to capitulate, I would have to consider this the end of the upside signal. And it's also a very short-term upside signal here looked at on the on stochastics before it actually continued to the downside, right? So yes, I would have to consider that an iteration of 10.48% to the upside over the span of 1 day. So that is one, right? So, and that's what I'm doing. I'm measuring the duration of the iteration, the upside thrust versus the profile, right? BBWP versus stochastics, the consistency or the frequency of right versus wrong. So represented by this green line and these red lines. So correct iteration, incorrect iteration, and I do not take any metric for the incorrect iterations, of course, because that's not what we're counting for. We're actually measuring an upside move. So total 20 iterations throughout the entire trading history, 17 of which have been guessed correctly to the upside, giving us an upside accuracy of 85%. Very impressive. Now that gives us an average upside thrust, or your mean, of 33.4%, and I have calculated the standard deviation from this mean. Now, if you're not familiar with statistics, what I mean by that is actually the distribution, right? So you're looking at 68% of the results being that standard deviation. So this is your average. These are your average performers. I have calculated the upper bound of the first standard deviation and the lower bound as well. So upper bound of the first standard deviation in here and the lower bound located over here, right? So you have an upper bound of the first standard deviation of 68.52% and a lower bound of 1.72%. Of course, we've already completed that, right? So now that we know the criteria or the context behind the statistical play, let's go ahead and take a look at what happened, because this is where things get very juicy. So far, the price action right now, take a look at the post price action at $7.30 freaking cents. My goodness. We are looking at this live right now, team. This is absolutely happening right now. So let me just go ahead and show you the 730 didn't happen until just now. All right, just so you know, it happened until just now at the post. So let's go ahead and take a look at the 35.12% of the standard deviation based on the firing of the volatility versus momentum signal, which was when? At the opening of this candle down here, September 5th, 2023. We are on September 11th right now. So we got that firing of the signal here, and 35.12% to the upside leads to where? Check this out. I can't even get it. $7.16. And what is 716? Well, that's this. This is the high of 716. And our daily closure came to be right by that, right? Now, our mean, the mean, which is this right here, the 33.40%, this is it right here. That was suggesting a move to come out and top out at 707. And we, like I said, right, we closed here at, let's see, we closed at, oh no, I'm sorry, the wick high came up to 711. Very interesting for the statistics to have already been telling us this for days and days and days. Guys, we already knew this. We've been going over these targets every single day for the newcomers and everything. Look at this, post-price action, $7.35, and that is officially the move completed from yesterday's video or Saturday's video. I said that it's very likely for the price action to go up to this resistance zone, 726 to 752, and we are sitting at 742 presently right now. Expect a pullback from the area of about 752, and then we'll see about completing the upper bound of the first standard deviation. This is very exciting for us to see the actual price action realize right before our eyes here as I'm going over the play with you. Okay, so please remember that if you did catch that long video, I did speak about a retracement all the way down to the 630 zone. We didn't get the 630, but we did get the 640. I mean, it was very, very little people that believed that I was actually correct within this, right? Everybody was talking about the catalyst, the S3, all of that good stuff. But remember, team, that pullback was not based on a fundamental. It was based on a technical. That was it. We were overextended on short-term time frames. We were just going to get that pullback no matter what. People in the live stream today were like, "Damn, ARCa, spot on, right?" So it's not about predicting the future here. It's just about knowing your rules. It's just about knowing the levels of resistance, knowing when we're way overheated in purchasing things, right? Just know that that's how it goes. It's all good. Man, 30 minutes left to closure for the after hours trading. This is going to be, if this price action continues to the upside like this, we are going to experience a massive IV pump in our options contracts, especially for the ones on the $5 range, $6 and $7 range, and also the extrinsic value for the out of the money options contracts for September 15th and October will violently go up if we gap up in the price action by tomorrow. So we're going to have to go ahead and observe the early pre-market to see what the price action is going to tell us. Because if we do get a nice closure here of anywhere up there, 742, 730, I mean, we remember we closed at 685. That is going to be a huge gap up, and it's going to be immediate pump into the volatility of our options contract. So that's very exciting, team. So yeah, I just wanted to show you that we've been observing these targets already. We had the top side leading perfectly to our statistical forecast. And now to focus on the following target, 68.52% to the upside, which is the upper bound of the first standard deviation on the bell curve all the way to the right side, right? That is going to lead to a price of $8.88, of which I spoke of in today's live stream as well. I am focused on the 888 because that would be the completion of the daily volatility versus momentum backtest, right? So that would be a very nice area to see price action achieve, right? And I do see it as possible. I do see it as a continuation to the upside. In fact, this little scare that we got today, I do have to admit that it presented a little bit of I mean, that was a close one, man. You're over here. I mean, we're over here overreacting, and the momentum is very fragile at these points. Okay, so I mean, not cool, right? Not cool. Already facing the top side of this. Check it out, team. The candle is sitting right now. Oh my goodness, the candle is sitting at 750 right now. And our top side resistance was 752. Perfect play. All right, now let's go ahead and take a look at the momentum here, because if we messed it up, then there could be a danger to this. But we want this to be upside pivoted, okay? If it's not upside pivoted, we're in trouble. All right, so let's go ahead and smooth out the factors here to see if we can get an early read on volatility. Okay, here we go. It's going to be the EMA 3 shifted into a 1 period with a smoothing factor of 1. Well, we're freaking lucky. We have an upside pivot still supporting the daily volatility versus momentum move towards the upside. We're still looking very good, and it is still consistent. All right, so I love what we're looking at here. I definitely see where the price action can eventually lead to, which, I mean, look at this, man. We are creating what I spoke of, right? This is going to be that very rare breakout out of this ascending channel. Now let's go ahead and apply trend line here, right? Take a measurement from the top side of your channel all the way to the bottom side of the channel, apply it to the candle that officially breaks out. Let's just go ahead and say that it would be the following candle. That takes us to a target of around $8.28, which already has it's confluent to the $8.80 of the upper bound of the first standard deviation. Looking good. Looking good. Everything is kind of rhyming with the targets that we're looking for, right, team? So I love it. Let's go ahead and move on to the next chart here. We did speak about a buy daily closure, and please notice here that we closed the buy daily at the resistance top, knocking at the resistance of this level here. So what indicator you're looking at here is actually the ARQ trend line, and this is one of the algos that we've written here and that we've released for retail. So this is a momentum-based trend indicator, okay? So it is able to identify your areas of support, pivots, telling you when the pivot is likely to be in for a reversal, and it tells you how the momentum is moving by using the MACD built into the candles. So MACD meaning the moving average divergence conversions indicator, right? So whenever it is red, it is oversold. As it starts to get into the yellow and orange area, that is the mean. And then as we start getting into the green area, that's overbought percentile. Looking very good here, right, team? So, and then inversely, it starts turning purplish as it goes into red, right? So you can see how the price action, how the colors work inversely. So this is a very impressive indicator, and it is suggesting that we are still, we're printing our first green candle here, right? So that's great. We barely got the opening of this bi-weekly candle, and guess what? It closed upside of the resistance from this huge triangle. Amazing, amazing, amazing. I love to see this. Price action currently sitting at $7.50 right now. Very impressive. Now, next thing to look at is the ARQ DBSI, which is another indicator that comes within the package of the algos that we're talking about. Please notice here that on the bi-weekly time frame, impressively enough, now the bulls are completely in the lead. 58% bulls, bears at 42%. We are taking it over little by little. Statistical indicator here that measures the candles printed upside of the EMA 13 and the candles inversely under the EMA 13. And then it gives you this representation of bulls versus bears right up here, right? It's as simple as that. Okay, so very, very impressive things here, team. If you are interested in acquiring these indicators and these algos for your advantage, definitely reach out to us at arqindicators@gmail.com. All right, team. So let's go ahead and move on here. Here's the bi-weekly closure outside of the Gaussian bands. We were looking for this. We needed this. The upside is looking ever so prominent right now, and it's definitely suggesting a continuation of it. All right, so please notice here that we broke out and we closed this bi-daily macro candle outside of the Gaussian bands, and I do have to say that there has not been a candle closing outside of these Gaussian bands since when? July 6th, 2021, pointed right at that candle right there. This is a big deal. All right, so this is absolutely something that is suggesting a continuation to the upside, and it can lead to some parabolic runs, as you can see here, right? And here, and here. So, so yeah, it's looking pretty good for the asset right now, team. I love what we're looking at. Let me see if I can actually put down, oh my goodness, look at that. All right, so I was going to point this out to you earlier, right? But ARMor, the ARQ algo, was already printing a long signal here in the previous hour. It printed the long signal at the close of this candle, which is 708, currently sitting at 750. Very impressive from momentum. I mean, I got to say, ARMor is the secret sauce behind the strategy, the long and short strategy. So that the signals there are absolutely powerful, and they are suggesting a continuation of that. Okay, team. So now opening up my personal indicator here, which is the ARC substance. This gives us relevant areas of resistance coming up. So $8.11 would essentially be the monthly resistance, and that is also it is confluent with the top side of our channel breakout at $8.26. We have substance suggesting $8.11, and we have the statistical analysis giving us the top side of $8.88 at the top side of the upper bound of the first standard deviation, 52% to the upside. Everything is absolutely rhyming pretty nicely. Sorry, I didn't get this RSI thing ready before this, but I know that I wanted to create a shorter video, damn it, but It's just so many freaking things to talk about. I even wanted to go into the price, what is it called? The price discovery, right? I mean, notice this. Everything is pivoted straight to the upside. There is, I mean, here is the 5-day RSI still with a massive validation of hidden bullish divergence, and that is still very much pivoted. I mean, it's completely erect to the upside, and it's approaching the gravitational zone of the bull strength percentile, which would essentially send its price action to the upside even further. Everything is looking massive here, team. So I guess, you know what, if you're still around, I told my master students yesterday that I probably right, check it out, bi-weekly silver cross happening right now. Nice. I thought I was gonna forget, man, but we didn't. We got it right in here. Nice. Bi-weekly silver cross has happened. Price action is reactive to it right now. Everything is leading to a very nice upside. So if again, back to what I was gonna say. I'm very nervous to share with you these targets, right? Because you guys, you have to know that at any moment somebody could take profit here, and just this thing will capitulate hard. Right? We just have to know that. We have to practice risk management here. Make sure to protect your gains. Do not just go in this naked. Stop believing that the market makers can see your stop losses. Yeah, they can see it all grouped together, but it doesn't matter. They're not after your individual 100 or 100,000 shares here. It's not like that. Okay, team, just watch out. Just watch out. Make sure to protect you. Don't protect everyone else. Like, no one is going to protect you. You know what I mean? Just make sure that you can protect yourself here, protect your gains, or else you're going to be subject to creating another community here. It's going to be the FNGR community, and why the crooks are there, and why they're never going to give us our money back. Don't be that. Don't do that. Do not give back to the markets what you've already taken from it. All right. So I don't care. I don't care. I care. You should care about yourself. Okay. Because the markets are not. That's not a place for togetherness and for holding hands. No, the markets don't care about us. The CEOs don't care about us. It's not like that. Okay, team, let's watch out for ourselves. Make sure to protect your gains, and then we can survive for another day trade and figure out the next situation and the next probability move, as every single day since the freaking 1800s when the S&P opened. All right, just like that, team. Let's be very weary over what happens here. Monthly time frame resistance already coming up. Look at this right here. This is the monthly Gaussian channel suggesting a top side of 770. Price action has already topped that 752. So we're getting very close to the resistance of that Gaussian band top. Now, descending broadening wedge, right? And please don't take it as me being heartless, okay? It's actually, I feel it. I feel it right now. It sucks for me to say what I just said, because I know, I get it, okay? It's just, I don't want to see what happened to me on AMC. I don't want to see millions of people getting trapped at these high prices and for the price never to come back to it. Literally never. I don't want that to happen to you. And I'm sorry that I have to be so rude about it, but I really would hate to see that. We are practicing with family money. We are practicing with our personal money here. Like, guys, that's dangerous. This is not the place for gambling. This is not the place for the moment you can, it's just like a toddler. It's like the moment you keep your eyes off of the little guy or your little girl, something bad can happen. It's just like that. Okay. Don't do that. Don't do that here. You don't want to be subject to a loss here, because this would really suck. We're extremely overextended right now, and we are very much treading in thin ice here. Okay. So let's make sure that we can keep this ice consistent, and so that we can flow with our skates straight through it into the upside, okay? But just know that risk management is something that you should be practicing within this, okay? Let's take into account some ridiculous targets, like I said, okay? I said I was very nervous to share this with you because, yeah. Okay, so master students, here, you guys already know this, but it's all good. This is the opening candle, first candle here on the monthly. Back to 1949 cents, right? 19 cents, almost 20 cents on January, 2015. For the beginning of the year, that is. Okay, so since we are riding this massive ascending channel, we would be creating here essentially a macro breakout. Now, know that this ascending channel is bearish, okay, by nature, and it's a monthly, so meaning that it gives high validity for downside, okay? If that's the case, then we would be in some serious trouble here if it does go to the downside. And I'm going to go ahead and show you that momentum right now is suggesting a break to the upside. But still, we are just over the medium band, okay? We're barely over that. So yes, while we're at about 65% bull strength leading towards the upside, know that there's still a 50% chance that this asset can capitulate very, 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 very low into negative numbers, the numbers that it could rug pull. It could literally introduce 17 cents or below. But since we are pushing towards that upside and breaking in to the, we're already in the bullish control zone, right? So if we start breaking into the upper half, which would be the bullish, the bull strength, that would likely lead into the probability of potentially breaking out of this channel. We can take a trend line to measure what that is. And this is where it gets very speculative, team. Please know that this is not statistically backed. This is not whatsoever something that I would recommend for you to look at. I'm just going to put this out there for you so that you understand how you can play a channel like this. Know that it can play both ways though. Okay, so let's go ahead and imagine here that this is how you take your price objective and then you apply it to the breakout candle. Let's just say that we broke out here in this following month, right? So that price action would lead to a very, very tight area within the targets of about 531.78 and 578.06 per the traditional trading book rules, right, of how to trade a channel. Again, this is not statistically backed. This is very discretionary and very unrealistic. I do not like to talk about targets like this. Inversely, if this fails, the resistance here, if it fails that resistance, let me just be very clear about that, okay? If it fails this resistance, price action can capitulate all the way back down to 88 cents and then further its loss into where? 3 cents, 3.53. Okay? Let me give you an idea over what that means, okay? Let's go ahead and take a fib inversely from the prior monthly candle. Let me see if it'll reach. It won't even reach. So let me go ahead and take an overall range for monthly, right? We're going to take the range low to the range high inversely to see if we can get some targets to the downside. Let's see what we have. All right, and here we go. And take a look at that. We actually have the 2.618 at 447 to the 353 under 1 cent of accuracy at the 2.618. It is geometrically possible for us to get rug pulled, okay? So now leading towards that upside where we were, let's go ahead and touch on the fibs one more time. Notice how the 3.618 at 577.30 is very confluent with the top side of 531.78. Just like it is under, it is on top. All right, team. So just know that there are several targets to be looked at here that are very just not realistic, right? First of all, you have the inverse head and shoulders, which is the buy formation breakout from this monthly iteration, and that's leading to about this target here of 31.47, which is confluent to the 3.618 at 33.16. So yeah, that's it for those targets. And I'm sorry that it went on to freaking 28 minutes. I just really wanted to show you something here, team. So let's just go ahead and cut it out here. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything would be absolutely cool. But with that said, team, I wish you well, a very, very good night, and I will catch you at the bell mañana, team. Adios. Yeah.